What is up, guys? Okay, so we're gonna be hunting around for some trades together. If you guys have any questions, you can ask them away in the chat, and I will do my best to go through them. We're in a long right now from this morning's trade hunting call, so I'm gonna share that really quick. Boom. And I'm just gonna wait a couple seconds here for people to jump in before anyone misses out on anything. But yeah, so this morning we did a trade hunting call and just got off it seconds ago. And we did a long, and we kind of got, well, I jumped in a little bit too early here during this break after we double bottomed off of this daily momentum. And there's a buy wall here as well for Confluence. And oh my God, Kyle is on my TV. He's famous. Thanks, man. Appreciate it, man. But yeah, so far this long's looking good, guys. Aaron, I know you were on that call with me. Wagner, what's up, man? First like. Oh, thanks, man. Thanks for liking. Help out with that YouTube algorithm. So we broke past this hurdle. This was like the first little area of concern. There's some liquidity there. Next area is right here, which is kind of like the measurable momentum-based move after this break. So we're gonna have to watch for some resistance around this area. But so far, so good. We're past our 1-to-1, so if anyone wants to take half off the table, then they won't lose any money in this trade, especially beginners that are just learning how to control their risk management. We got this for our momentum that we could follow. Let's see how it goes. This is the 1-minute chart, so a lot can happen. I keep missing these. Oh, you missed that? I'm sorry, man. Were you in the trade hunting call this morning? It's like it wasn't posted as a signal, unfortunately, because it was like on the 1-minute time frame, and posting that as a signal is a little bit of a struggle. While I'm typing it, the opportunity is usually gone. It's okay, man. There's tons of other opportunities. Especially in the crypto space, it's open 24/7, doesn't stop. No resistance today, up to 90K now. Yeah, maybe. So we got, so we'll zoom out a little bit since we got some distance away from entry. We're in this descending channel and we just hit against this uptrending momentum that's been holding us up since we confirmed this massive move right here. And I know there's some fear in our hearts this morning of this potentially going down further, but there's a lot of buy confluence. We were looking, like William, part of the community, brought up the fact that we had the confluence of the golden pocket here. And when I was looking at the order books, we saw that there's a lot of buyers waiting here. So there's a lot of confidence in the reversal. And yeah, and then we scooped up some more extra liquidity when we zoom in on lower time frames. When we bounced here, on some exchanges, we actually got this one too, got a new low and scooped up the liquidity and helped provide momentum to pump the market a bit. So it's playing out so far, so good. But now, right where we are, is a previous value area high. So if I zoom out, and for some reason the fixed range isn't really populating, but it's from here to here is the pole. And the value area high of this pole is what we're combating right now as we speak. So getting a rejection here means getting acceptance into this value area, and we can go lower. Go back down to the value area low of this structure. So that's the bearish event that could happen that we got to be watchful of. That's why I'm not really shooting for the stars for this long. So I want to be cautious around this little box zone here. But at least we have a 1 to 2 when we get to this point here. Golden pocket held up like a charm. Yeah, it did, man. So reading the chat, Damn, I'm trying to master scalping. Looking forward to seeing someone do it live. I hear you. Yeah, scalping, depending on the time frame that you choose, that syncs well with your trading strategy. When you build yourself a set of rules, it gets pretty easy, especially when you have rules involved, because the rules allow your emotions to kind of like step back a bit. If you let emotions drive your trades, then it's not impossible to be profitable, but it's incredibly hard. It's a lot harder. Sometimes emotions can get you into really, really good positions or extremely bad ones. So yeah, man, really it's all about just setting yourself a set of rules. Like mine are pretty simple. Well, there's easier ones out there. Like you can use like a Bollinger Band strategy. We have some members in the community that are making a killing off of the Bollinger Band strategy, but the downside with it, there's not as many opportunities as other strategies. But there's people with like 90% win rate right now with it. Yeah, we'll see what happens here. I don't want to. This is only 1 minute momentum, but I don't want to see us lose this before hitting at least a measurable move. Or we could be held up by this local resistance to flip as support. Is there anything you guys want to look at? I've got until 1 o'clock Eastern. You could probably see my clock on the thing. So I got about an hour before I gotta work on moving more of the courses over to Fanova. And for those of you who don't know, InvestiShare just merged with Fanova. So everything that InvestiShare has to offer is now under Fanova. And I think I got to adjust the links of this video. So I got it. Just so you're aware, yeah. If you get directed to the InvestiShare website from this video, it's going to just suggest for you to go to Fanova. I'm using Stochastic plus RSI plus Rwanda Watson envelope. So you're doing a mechanical based strategy, but you do really need to depend on market structure too, like how the candles are printed to define whether or not you should enter. And the candle closes, for example, breaking above certain key levels of structure. It's a full body close. It's like a form of price acceptance. And if you add like market structure to your rules, it works in confluence with everybody's strategy. So that way you have strength backed behind your entry, and a lot of trade participants will help provide volume to your trade if you wait for a structural break too, of either a support or resistance. Rule number 1: don't trade against Kyle. You can trade against me, but you'll just give me some liquidity for my trades. Just kidding. I trade against market makers, so you can't really trade against me. I'll trade with market makers, what the flow of market makers are doing. ZRO. Oh, yeah, and I'm not sure if Onyx is on here yet, but if Onyx is on here, we could look at Avalanche and Solana too. Okay, we're holding up this momentum so far. When you get it back above this value high and create a new high here, before we can get that continuation. The pace is pretty good. Like from here to here, it's only been 23 minutes. Also resistance support and Fibonacci. Yeah, Fibonacci for confluence is really good. If we actually entered a long off based off Fibonacci confluence. All right, just keeping an eye on this. We'll open a new tab to add to my list of tabs. And we'll pull up, do I have a ZRO chart? I doubt it. Yeah, I don't even. Okay, we'll just be cautious here. I'm gonna set an alarm. It'll scream at me if price closes below here. Once per bar close. Great. All right, so if we get a 1 minute candle close below this, I'm gonna potentially take some profits. The CRO, USDT. So I don't know much about ZRO. So just let's go to the daily. Is this a layer 0 project? Cal CPU, no. Oh, I might have my VPN still on because I'm trading. So my connection's gonna be a little weird, guys, for this live. And I would turn off my VPN, but if I do, then I risk losing money, not being able to control my position. What's up, guys? So this is on Binance for ZRO, and it looks like we are maintaining an uptrend here. We got an ascending channel that was broken to the upside, and it's trying to keep. So the momentum of so normally when you see a rising wedge. Oh, I just got the warning. It scared the crap out of me. I'll go over that in a second. I'm just gonna take a look at Bitcoin because I'm in trade right now. 5 minute, 1 minute. Zoom in. Okay. Doji. Yeah. So when you ever see a doji, by the way, you should always dissect it, because a doji can be a confirmation of support or resistance during times of indecision. And so you really got to dial it down, especially if it's on the daily. The daily is basically expressing that we went up and we came down and we came back up again. And it could be a confirmation bounce off of a critical level. And here we have a little doji, and we zoom in on like the 10 second, because I'm on the 1 minute chart. I have that dissected on like the 10 second, and we can see that it came up and it came down, and it hasn't fully confirmed yet. So we're still in an area of indecision. And then when we get that lower low, it usually tells us that we're going to go down. So here I'm going to take some profits off the table if we get the close below this like horizontal support here. Little 10-second chart. Blah. And luckily we got buyers come in. Let's go back to the 1 minute. Get close back above this, then good flag. Now go back to 0. I'm sorry. I just got that alert went off. I was just concerned about the position. I'm not going to turn that off because now it's just screaming in my ears right now. And probably scaring the kids too, because when my alarm goes off on my charts, it goes off throughout the entire house. So I don't have to stare at the screen all day. Like one big problem with traders is that they just stare at the screen waiting for stuff when really all you need to do is set alarms at key levels so you can reduce your screen time. You do your analysis. Once you got your rules set up, it should only take you about 5 minutes to do your analysis on an asset. And then you set your alarms to prepare for those rules to be met. Okay, I got to close some of my position here, dudes. I'm just going to close half of it. And now I'm going to adjust my stop loss to break even. So now I can't lose money on this trade. I secured the gains. And I'm going to let it ride for the rest of it. And let me undo this. Just so I can control the anchors better. So yeah, I'm just going to let it ride as long as we can. And see how it goes from there. Something's off about these anchors. I don't know where my right side anchors went. They're all gone, so I can't expand this. Trading view's been weird lately. All right, cool. So now that we can the position secure, if we're gonna let this ride the rest of it out, then I don't have to stare at this, don't have to babysit it anymore. So we can look at ZRO and see how it's going. And then I'll go through the analysis on the list here, because I got ZRO, we got AVAX and Solana for Onyx, and we've got fire for David. Gotta set up a split tunneling with your VPN. Thanks, Matthew. I'll take a look into that. I gotta figure out how to do that. That'd be really nice. I see all these traders on YouTube showing their actual exchange stuff, meaning they're actually trading live in front of everybody, and there's no like connection issues with their VPNs and stuff. So they're obviously doing something right with their setup. But anyways, what I was going on about with CRO and explaining like a rising wedge, like a rising wedges are usually formed like you have the high volume from high confidence, right? And then confidence usually dwindles from all the buy pressure. We went on an uptrend for a while at areas of resistance because they're not confident that we're going to go up that much further and then we're going to go down. So they're more likely to break to the downside as a result. But zero is young. And so when it tries to squeeze, the only thing that really holds it back is psychological levels of resistance and support. And you can use the order books to verify that. So it might be able to have a strong continuation here. So let's zoom in on the hourly and see what it's doing. We got some negative space from the momentum. We had a bit of a tweezer top here on the hourly. Usually that's a bearish sign. And zoom in on the 15. Well, this thing loves tweeter tops. There must be a strong sell walls here. And this is going to take a lot of so honestly, its positioning is you should be preparing for shorts. We're at the value area high of this local area. This is the momentum here. Let's see what kind of bounces we get. You'd kind of want one happen around the value area high here if we come up and have a bounce here. So we can use that structure as a guide to tell us when we're going to get acceptance to the value area and target the value area low for a short. At least that's short term for it. Long term, I don't know much about it. We're at an area where we can have a strong continuation, but I think it might take some ranging time first. And we zoom out a little bit on the hourly. Yeah, there isn't really any structure other than locally right here. And if we lose this area, this range here, then we can come right back down, retest this daily momentum and confluence with this horizontal level of support around 440. And that's the bearish case scenario. And if that bearish case scenario happens, that would probably likely happen because of the timing of the structure. It'll likely happen in confluence with Bitcoin reaching around like 70,000 and potentially get a rejection off its macro range high. Let's see how it goes. I would give you more, but there's not very much structure. So let's look at CRO. Switch back to Bitcoin on this chart. Not zero. We'll look at AVAX. Go back to the 15. Zoom in. Okay. Let's go to 5. All right. We'll leave this here, and then we'll pull up the avalanche chart. What happens at price discovery? At price discovery, you're basically looking at price discovery is basically when an asset reaches a price it's never been to before. You never want to see it happen to the downside, because if it's price discovery and the downside, that means it is below its like opening price from the day it's been created. when it is price discovery to the upside, then you're looking at it's basically printing its all-time highs. And if most people don't notice this, but if you see these little grids that are on your chart, these grids are mapped out psychological levels of support and resistance. Like, look at, we just got rejected off one locally here. So these are like psychological zones where you can anticipate where people type their limit orders for buys and shorts, because people love typing in rounded numbers without doing any real analysis. They'll just type in rounded numbers of where they want to exit. So when we're in price discovery, you got to watch these levels a lot more hawkishly than you would while we are below the all-time high, because that's the only real data that you have other than looking at the heat maps and the order books. And the order books will literally tell you what's happening, where people are preparing to sell and buy. For example, we used it as a tool this morning to help decide where the bottom will likely be. And if you see these giant cliffs in the order books, that's where people are preparing to buy. And over here on the right-hand side, if you see cliffs, that's where people are preparing to sell. And the bigger the cliff, the more confidence that traders will have that that is a top or a bottom. These ones are really small. You will notice them really, really well, even as a beginner, where these cliffs are when there's a lot of confidence in a certain area. So when we're in price discovery, like say, for example, Bitcoin's at like $80,000 and we've never been there before, you got to watch the order books a lot more carefully, because it's going to help reveal some areas of resistance that have not yet been met before. And then the heat maps is also a great tool, because it gives you an idea of what other traders are doing with their leverage and their entries. And market makers love to hunt for that, for like exit or entry liquidity. Yeah. So I can show you an example of how I just started using the heat maps this way recently. It's pretty cool. So you basically just, let me refresh this chart. We'll do an example on Bitcoin. So we can see that there's a lot of liquidity here. There's like $32 million right below us at 66,466. And there's some above us. There's 36 million at 67,800, and a whole bunch at 68,700. What you can do on TradingView, you just take a screenshot of this. Oh, wait a second. I usually like to put my mouse over top of a key area. So this is a key area right here at 67,800. So now I have that captured, and I can just screenshot that, go to TradingView, press Control V, puts the picture on your chart, and then you just expand it to sync with the price action. And you have a really good window where you can prepare for areas where you get liquidated and stuff, or other people will get liquidated. And think of liquidation levels like magnets to the market makers. They want to go there for exit liquidity. So you can use it to help control your bias of where you think price action is going to go. Where's most liquidity being held? Is it above us or is it below us? And if you can say, for example, that it's above us, and then we break resistance like we did here, then you can use all that confluence to tell you that we're going to go up. And then you just got to be cautious around those zones, because if it's being used as exit liquidity, we're likely going to go back down. So at $67,801.60, $36 million will be liquidated. So you can put this little horizontal line, and let's make it yellow and bold, and then just go here under coordinates and 67,801.60. All right, so we have that marked up there. So we know that there's going to be a lot of liquidity here from people in shorts. And I don't know why, but they're still in their shorts. So they're not taking profits, and I don't know what it is, but they don't. You can see on the heat maps if they get scared out, if we get closer, but most of them will just wait until they get completely liquidated. So if we are going to use this as a guide, you should prepare for an exit around this area. But until then, it can act as a magnet to bring us up to that point. And then you can use the order books to find out if it's guarded. If you see a ginormous sell wall, then you know it's guarded. So you have to undercut that sell wall instead of focus around here. Does that all make sense? Can you share how you use heat maps via CoinGlass, and are there any specific settings for the tool? It is a free tool, and the settings are based on timeframes. So it's not really something you can really mess up with, which is nice. It's not a really high skill cap tool. So this is CoinGlass, and you can choose your time frame. I dictate how I choose my time frame based on the age of the structure that we're trading within. So if we are trading a structure, for example, over here, we ranged for about 4 days over here. And I use the heat maps religiously in this zone on the 3-day time frame, because we were ranging here for about 4 days. So we can get a lot of data of new liquidity that was added within the last 3 days within this range. And we saw that there was a bunch of liquidity right here, right above here, actually. So when we broke this, we were able to use that as confluence to tell us where we need to prepare for some hurdles. And it actually exceeded past our target, which was kind of nice. So in that scenario, yeah, just go to the heat maps and just switch it to the 3-day. And if you have younger structure, you can do the 12-hour like we did during this little 1-minute time frame trade that we did. If you have older structure, like if you're, let's say for example, you're preparing for like a macro base move, like a long-term trade, you can use the 6 months to help control your bias. And we could see that we have, what is it, like over like $40 billion up here. It's stupid. We have a lot of money up here. And they're still in, even after we confirmed a reversal down here. So we're hunting for that right now, but this is very, very, very heavily guarded. Lots of sell pressure. But now most of the sell pressure, surprisingly, is at around 75K, and I think that's mostly miners. When you look at the order books, you can see there's miners preparing. I'm assuming it's miners because if you look at the data on chain of how much it's costing them to make a Bitcoin, it's about $75,000. So some of them are trying to break even on their costs around 75K. And the people that use like green energy are probably more profitable than that, but the average person's around 75K. The average miner, sorry. And I'm not talking about the miners that you find at a high school. I'm talking about like the Bitcoin miners that create blocks. So let's go look at Avalanche and Solana. Because I said I already do that for you guys. So Avalanche. Oh yeah, we're looking at Avalanche here. So Avalanche just recently broke a falling wedge structure that I wasn't really bullish on. And Cardano is like kind of doing the same thing, but it is obviously at a slower pace because there's less trade participants on Cardano and there's less investors. But right now, what Cardano is trying to do is get acceptance into this macro head and shoulders value area. And if we get acceptance back inside it, it's going to be pretty bullish, and it'll come back up to around at least the point of control, the previous point of control at 35.95. So here I would mark previous value area low. I'm going to change this color. I don't know why it's red, to the previous point of control. And we'll mark the value area high, which is if we get acceptance into here and you're inside of a long on this, then you can target the value area high, but be very, very mindful of potential reactions to the point of control. Like this could be a good take profit zone here at this previous point of control. So let's look at previous. We'll just put this here, value high. So yeah, we're getting acceptance back up here. What we need to do to confirm it is just see now we came up, we got this new high here, and we're coming back down. Once we have the higher high, it confirms it, but you do want to wait and see You also want to audit the order books to see if there's a giant sell here in case it causes bearish divergence. And that is technically a lack of acceptance of a value area. And if we break this neckline of this potential double top scenario that I'm just mapping out for you guys, then that's not acceptance into a value area. You come right back down. Usually pretty harshly too, because you got to think about all the people that accumulated at this area that are trying to get out of break even. But for now, yeah. Oh, I just didn't mean to move that. I need to lock this thing. There we go. We zoom in on the local time frames, see how it's behaving. It does look like it's trying to flag a bit. It got a bit of a descending, broadening wedge. It's not very... I can't even... Yeah, this thing is messed up. I gotta send this thing backward. Visual order, send to back. What I basically just did there was send my long position tool so it's behind these trend lines, so I can actually click on them. So once I put them on there, I haven't been able to adjust them. But anyways, yeah, so if we end up breaking this to the upside, these broadening wedges don't normally go very far. The top of the formation is the target. So if you see any confluence in the order books showing you sell pressure, like a lot of sell pressure, you can anticipate the resistance and thus potentially range here a little bit longer and maybe do the double top scenario I'll talk to you about. But I'd rather see this thing get a higher high with some strength so we can have acceptance to this value area and hit the point of control. So that's Avalanche. Is there any other questions about Avalanche before we move on to Solana? That's cheating. Nice one. Extended the fibs with round numbers are good. That's a good point. Well, I'd love to hear your opinion on CAS. We can look at CAS as well. So let's pull up Solana first. Oh, this isn't my Solana chart. This is a lesson chart. Oh yeah, so some of the members entered along on this morning. I think it was It's Okay Crypto. If we double top here, just be mindful. That'd be a good warning sign to get out of that position. And zoom out a bit. Just want to go to the daily on this thing first. Got some crazy noise on here, I'm sorry. All right, so we're above this double distribution value area high here. So here, because of how I pulled this range, it's very macro. It's from here to here. We have multiple value areas within it. And because of that, we move quickly between them. And we have a valley or a price gap where price actually moves quickly. And this is called double distribution. And now we got acceptance into the upper side of that double distribution already from this bounce that we got right here in the lower time frames. So Solana is doing pretty good. It's got some relative strength. So we'll see what kind of structure we get if we break this recent high or not. And maybe we'll have a continuation for it. Zoom in on the lower time frames. Solana is absorbing a lot of market shares from other network tokens. With all the news going on right now with a potential Solana ETF coming out, that'd be pretty wild. And I know that Solana team has been wanting to get on the NASDAQ since they created it as part of their roadmap. So having an ETF would be a really good start before going public like that. But if we break this local high and we don't reverse here, we can use this structure as our guard for our stop loss on the double bottom. And the momentum based target is from here to here. Target of 184. But with the target of 184, you want to be mindful of the supply right here. Oh, sorry. Messed that up. I got the rotating triangle instead. Right here. Technically it's all this, but. So CoinGlass is great for heat maps, but you can use CoinInk if you're someone who likes to trade altcoins more. Because CoinInk gives you more choices. So if you're trying to trade something like Solana, you're going to have to go to coinink.com and wait for this to render. And you get different styles too. You can choose Magma and whatever the heck way you pronounce that. And you just go choose your time frame and you can choose your asset. So we'll find Solana and see how the liquidity is for that area. If it's even on here, it should be on here. It's one of the top market cap. There it is. And we'll do the 12. $18.65 million at 182. 182. Yep, see, lots of liquidity there. So right below this, man, it's pretty low. Okay, right here is where we got lots of liquidity between here and here. So I would actually extend this little box that I've got down lower. The heat maps will help you make these kind of mistakes. And I'm assuming that a lot of liquidity was added during this time too. When it came up, people entered shorts, lots of new liquidity. So we can target here and prepare for a potential range activity here, see if it will continue up or reverse. So that's Solana. And what was the other option? We wanted to look at CAS as well. Got M warning. Yeah, I see you're saying, man. Yeah, we got that local resistance. We could double top here before coming up here. If we double top, then that measurable move is small, but it could, if it ends up getting close to your entry, like this is a good warning to tell you. GTFO. But yeah, let's look at, GM entered. Okay, I got what you're saying. Bitcoin's coming back down. Oh, we didn't get that higher high. So yeah, we're getting rejected off the previous value or high that we're talking about. So we could go much, much lower. Like much lower. Let's see if we build some kind of bullish divergence here. Past, we had some here, but okay, let's go to CAS. Someone asked us to look at that. Just gonna make sure my stop loss is being honored. Yeah, okay. All right, CAS, let's zoom out on the daily because I haven't looked at it in a little while. Oh, it's doing pretty good. So, when we last looked at it, it's obviously here. We were mapping out this downtrending momentum. We were watching a key level, looks like on the lower time frames because it's cutting through the full bodies of the daily. Let's update this. So we actually had the value area high act as a form of support. We even created a higher high. So trying to leave this value area to continue to go up. And I got this level marked as a key area of resistance, but I don't know why. Let's zoom out. Oh, right, this is his all-time highs. I wonder why I have that mapped out then. There might have been a sell wall there. If there was, it was undercut a little bit. But anyways, yeah. So CAS is doing well. Even after losing its momentum, this daily momentum that's been holding it up since a micro penny. We started to range instead of getting a harsh rejection, which is great. And we're building a little bit of a regression trend from people stacking too many shorts. And we'll zoom in on the hourly. Here we're coming up to this momentum here. So it's a bit of a make it or break it moment right now for CAS. If we want to try to reverse and get acceptance back inside this little valley area here, we need to break above this area and we'll get that change of character. We'll get past this local resistance and confluence with that and get that acceptance, and then we can target the value area high again. So I would be preparing for potential short, long. We've got a lot of confluence of a reversal here. With this local support, previous resistance, we have this momentum, and we have easy rules that we can follow here for the long. And if we zoom in on the 15, we might be able to isolate a better entry, but here we're going to be looking for a confluence of a break of this momentum, so we know that the pace of the sellers have slowed down, and that and then a break of above this level for our long, and then just target it'll look something like this. We don't have enough structure to dictate exactly where we're going to put our stop loss, but it would look like this with a potential TP zone here, here, and here. And that's the bullish case scenario. But structurally, this is all we've got to wait for to confirm that reversal. Fire on Solana. Thanks, man. Anything else you guys want to look at? I've got half an hour left. We gone through quite a bit in half an hour, to be honest. We looked at potential continuation on Avalanche. We've got CAS, potential long setup here. Looks like we just scooped up liquidity on CAS, so we might have enough purchasing power to bring it up. Let's see what happens. If we get that lower low, though, I'm not going to be very confident on it reversing, because then we get acceptance back inside this local value area here. And anyone who understands formations, they get a bit of an edge knowing that we're about to leave a value area. But also value areas help you they keep yourself from being trapped in what people call fake outs. Like, if, for example, if the short played out and we broke this level, the measurable target would be the base of this structure. But we have the value area low here. So it kind of keeps you grounded. If this confirmed, this would be a good area where you take profits. Prepare to take profits for any reversals in case it reverses from there. But anyways, yeah, this is the value area high that I'm concerned about here, getting acceptance into. And we'll get acceptance into it if we get that lower low on CAS. Then we watch the same way we would be mindful of the POC along the way up. We'd have to watch it along the way down as a potential barrier towards any short targets. And if we break past that, you can focus on the value area low. But we have a really perfect bounce off of it so far. So it's being honored as support. to validate as support, we'll just need that change of character up here. Does that make sense? Off top, how to find good stop loss with session value VA and 30-minute candles. The average true range is kind of long. It's kind of long. Yeah, the average true range is okay in some scenarios. Typically, when you're using the average true range as a stop loss guide, it could be on the opposite side of your trade. Let me just pull it up so people understand what I'm talking about, because there's some people on here that are new. So if you look up average, just the word average, this should come up. Or if you just type in average true range, you'll see average true range trailing stops colored. And this indicator is this line right here, this red line. And when price action crosses it, it's going to update to be green below the price based on the volume. So it measures the previous 14 candles of volume and gives you an idea of where to prepare to put your stop loss. And it reduces your chances of being stopped out by about 65%. Rather than just using structure, it'll give you like a gap distance based on the volume that it'll be very difficult for the price to reach during that time. So you can use it as a guide to trail your stop loss. So, and it doesn't always give you the best R&R unless you're doing like a long-term swing kind of trade. So you have to use, sometimes you have to use structure if the R&R is not safe enough. You need at least a 1 to 2. But structure, man, structures are key. And like using swing low guards, seeing if there's buy walls on the order books. Like if you see a buy wall near where you put your stop loss, then you know that there are buyers protecting your stop loss, protecting your capital. So you can use other traders as a tool to protect your capital. And market makers do this. They actually build walls off of their own entries to protect their capital, to make it guarded. Because they have the money to do it. They have lots of money to do it. And because they put a wall there, it manipulates other people to contribute to that wall too. And sometimes they kind of like want to be undercut. So they can use retail money to drive the price up. Or drive the price their direction at least. What are your thoughts on Bitcoin and inverse perpetual trade? Would you look to enter now or confirm about 72K? So the best answer I could give you right now is that we are very late for a inverse perpetual trade. Now, not saying that we can't get an opportunity up here if we have this value area act as a form of support. Sorry. If we have this value area here act as a form of support, this is the daily time frame we're looking at. And we break above 71,570, then we could potentially have a really, really good inverse perpetual setup there for a move to levels as high as like 80,000 plus, because of the billions and billions and billions of dollars of liquidity up here that could be used as a tool to drive our price up. It could also be used as a tool to drive the price down, so we have to be very cautious. But right down here was the best time to exit shorts and to enter a macro long. Because at this moment, we confirmed so many things at once. We had this local value area high act as a form of support, then we came up, and then we got the higher high, right? And then, on top of that, this is a daily neckline, full body neckline here that was acted as a form of support at the same time. And the 200 EMA acted as a form of support. So we had so much confidence to enter along here. It's no wonder we just skyrocketed, because all the trade participants that use different strategies would have entered off of that. There's like 5 different traders would have saw that met their rules. And because there's like 5 different types of traders seeing that, they're all going to participate and drive the price up together. And on top of that, on chain, right here, a large amount of whales jumped into the market. It was like $30 billion jumped in here. So that was a good conduit to help drive the price up too. So this, honestly, man, this was the best time to jump into inverse perpetual trade, because when you do an inverse perpetual trade, you normally, especially like a macro one, you want to jump in during times of strength. Like you wouldn't see me jump in down here. You'd see me jump in here knowing that the price is going to go up and that we confirm that it's going to go up and that this is the reversal. Because we just recently broke the downtrending momentum on the daily, where this downtrending line is here. And that's like your first warning sign too to enter it along. And it's the same thing here, prepare to enter a short. And now we have this momentum that we're following. So if you're going to do an inverse perpetual trade, your short goggles should be on soon, preparing for a short. You can accumulate more Bitcoin along the way down with an inverse perpetual setup. For those of you who don't know what I'm talking about or what I'm answering here in the chat when it comes to inverse perpetual, you basically use Bitcoin as a collateral instead of a stable coin, so you can earn more of Bitcoin rather than USDT. Let's update this. But yeah, in my opinion, long-term inverse perpetual trades is the fastest way to wealth in crypto, because you can treat Bitcoin like it's when you're doing an inverse perpetual trade, you kind of get to treat it like it's a gem that you found in the altcoin space, right? Like, what's the difference between entering sorry, there's a big difference, but you can mathematically in how you grow your wealth, there's not very much difference between using like a 10x inverse perpetual long on Bitcoin versus like taking a massive, huge risk on a potential altcoin to like 10x in value, you know? We can see Bitcoin going up 10% and you can make 100% on your trade. Moo Juice. What's up, man? How many trades should I be in if I'm scalping at the same time? So if you're going to jump in multiple trades at the same time, you can either do it in a hedge-based trading, which means you're doing shorts and longs at the same time, or you can do confluence-based trading, where you can do just all longs, all shorts. And if you do like all longs, all shorts, you should use, especially in the crypto space, you should use ones with that don't have relative strength against Bitcoin, meaning it moves with Bitcoin. So you can kind of use Bitcoin as a tool to tell you where an asset's going to go. But it mathematically makes more sense to just do one trade at a time and just commit more margin to it. Like your goal is to risk to lose normally 1% with your trades to gain 2% or more. If you're doing that simultaneously with 3 other trades, then it's a lot harder to manage. So if you're going to do multiple trades at once, I normally recommend only doing like 3 maximum at a time, unless you've got some kind of system that'll allow you to manage it, because it's not easy keeping track of 3 assets at once. You see some warning sign with Bitcoin, and Bitcoin goes down, and if it has chain influence over the other asset you're trading, it's going to go down with it automatically, even if there isn't sellers, because of the liquidity pairing effect. So 3 or less is my suggestion. And if you have a scalping strategy, normally you get 1 to 2 safe trades per day. Normally, depending on your strategy. Some strategies out there that allow you to do a whole bunch but in a day. But normally the more trades a strategy provides you in a day, the lower the quality that trade strategy is. So if you add more rules of confluence to your strategy, it will reduce the amount of trades you do, but they'll be higher quality and you can have more stable growth with your trading account. So backtest adding rules and modify your strategy over time. But before doing it in a live environment, make sure you do like 100+ trades in a replay environment to make sure that it's a safe call adding that rule or removing a rule to your strategy. Can I look at injective, please? Yeah, I can do that, Luke. A sec here, man. I think I got an INJ chart. Injective. Oh, we got a rounded top forming. Slow pace sellers. I'm going to zoom in on the daily really quick, see how it's performing. So objective, yeah, we were monitoring this daily momentum here. And we had a good bounce here, but this squeeze event from this downstream momentum here drove the price down below it. And we rode against this momentum as resistance for a long time. We were monitoring that for a while. And we finally got that last rejection and confirmed it here as resistance. Wild move. And now we got acceptance back inside this value area, and we're approaching the value area high. So a lot of, well, we're actually at one bullish thing that's happening though is we're trying to reclaim the 200 EMA. So I would like to see some more range activity either at or above, preferably above this value area high, so we can give it time for the 50 EMA to catch up and cross over the 200, so we can have like a lot of trade participants react off of the golden and the death cross. In my opinion, this asset's a little young to use it, but if we get that, we might see some really strong momentum in the market for injective. We do got some macro bullish divergence here. If we break above this key area, then it's off to the races for it. So I'd watch this level hawkishly, 31.27. If you're in a long down here, like your TP zone, like you're at your, yeah, you're at your TP zone here, but right here is a level that you got to watch very carefully. If we break above that, there's a lot of liquidity trapped up there. You can tell just by the structure. Zoom in on the 15 though and see how it's behaving. Saw a little bit of a rounded top, which is normally bearish. Got that momentum that we can track. A little bit of regression trend from here to here. People stacking their shorts causes these kind of regression trends, these uptrending channels. And we had it confirmed as resistance, and now we're back at, that's the 200 EMA that we're talking about here. Now we can pull the value area from this point of consolidation to the current price. And we see we're also bouncing off the point of control, which is, so we could, this is a good potential reversal point with the confluence of the 200 EMA, the local POC. So we got to see how it reacts to this momentum, what kind of structure we form. This is basically giving us a time ETA and when to prepare for a potential trade. And it's about 10 hours from now. So we'll see if we get a continuation structure or a reversal structure around here. But nothing to take action on yet. But there is definitely something coming soon. If we get that continuation structure and we break below, make sure you watch the point of control to be broken first before jumping in on a trade, unless you get some kind of a liquidity grab first. You can get a good high before going down, but if you're trying to get in during the break of the low, just make sure you watch that POC, and then you'll be targeting the value area low as your first target for the bearish scenario. The bullish scenario is more profitable, but in my opinion, the bearish scenario is a little bit easier for beginner traders. Why my exchange tells me that 1x is still leverage. What risk factor do I incur extra as compared to with just trading longs and spot? So with 1x, you are technically trading almost like a 1-to-1, just like you would with spot. but you can adjust your leverage and your margin a lot easier with the futures environment. And the one thing you're going to have to watch out for that you do not have to watch out for with spot is funding rate fees. So if you're going to be jumping in with a 1x potential, well, like 1x leverage trade, it is usually better just to do spot unless you plan on controlling your margin and your leverage later on in the future. If you want to ramp up your leverage, stuff like that. So yeah, I would just stick to spot in that scenario. That way, if you're doing a longer term trade, which is usually what 1x is for, then you don't have to worry about funding rate fees. And the funding rate fees, if you're not aware of those are just fees that exchanges will hit you with every 8 to 12 hours, depending on the weighted interest of either longs or shorts. If they're negative, it's usually very bullish for the market. And if they're negative and you're in a long, you get paid for being in that long. Can stock futures be just as profitable / easier? I would say stock is a little bit easier, but crypto is a lot more honest. If you get good at on-chain data and you get good with all these tools that crypto has that Forex doesn't usually have, like being able to see liquidation levels as easily as we can. Like, I know you can do that with like the Forex and stuff, but I would say like crypto side is a little bit more honest. You can see exactly what's going on chain. Whereas with stocks, some of it's very news dependent, and you got to depend on the CEO to do their job, stuff like that. So if there's a news event, it could really influence your trade setup. But not knocking either one, man. You can choose whatever one you feel is easier. Stock market's a little bit more slower pace. You get breaks. It shuts down at the end of each day. It shuts down during the weekend. So it's really about your lifestyle, man. But personally, for me, faster paced wealth will come in the crypto space, and that's just my biased opinion, to be honest. Okay, is there anything else I'm missing? What about just scalping stocks? Yeah, there's a little bit higher fees with stock market, but you can just scalp stocks too. Lots of people in our community do it. Like Brian, for example, he trades gold and silver and stuff. And having an edge of knowing what the stock market does kind of gives you an idea of how the funds are flowing between the crypto space and the stock market space. Like, for example, right now, the S&P 500 is kind of like inversely correlated to Bitcoin. So it kind of gives you an idea that as like the S&P 500 goes down, you can see if there's any on-chain evidence of printing of USDT or USDC to see if those funds could be potentially coming from, if you do a measurement to see if it's coming from the S&P 500 into crypto. If they're inversely correlated, then it'll pump. But for the longest time, they were perfectly correlated. Like Bitcoin would follow the S&P really tightly. And now it's kind of the opposite. And I think it's the NVIDIA hype that's doing that too. It's adding to that. A lot more interest in the stock market from NVIDIA. And now that there's Ethereum ETFs coming out, the crypto space is kind of like coming back alive. And that's tomorrow, guys. So tomorrow there's the Ethereum ETF. And so if you're preparing for a position with that, you should also look into, I highly, highly recommend looking into scalable solutions for Ethereum. Assets that provide scalable solutions for Ethereum, because they are going to thrive during the Ethereum ETF. Because not only because of the fact that they help this scalability of Ethereum, but also because of the fact that they have tons and tons and tons of Ethereum liquidity. So as Ethereum goes up, they're going to go up even without buyers. So prepare for that. Soothing Music wrote more liquidity at 66.5K for Bitcoin, 39 million liquidated, whereas 68. Oh, look at you go. Yeah, that's a good way of controlling your bias. So there's more liquidity below us locally than there is above us. So price action is getting drove back down. Now you're doing a good job, man. Any insights on how to read the data more precisely, referring to liquidity maps? That you're doing, that's perfect. So you just use structure to define if we lose key areas of support, you at least now have an area where you can anticipate whales to enter the market and where market makers are going to drive the price to go. You got a pretty decent edge. Ethereum's structure is actually really good for... So one thing that... So we're at kind of a similar situation to... I think it was this... what were we looking at? Avalanche that was doing this? Or was it a different asset? We're coming back down to hit this previous value area high as support. And we are getting squeezed against it. There's lower and low. See, when volume starts to slow down like this, it means the confidence of this being broken is dwindling. Like it's the confidence of it going down is dwindling. And they take the form as a falling wedge. So I'll prepare for a potential long, potentially soon for Ethereum, and the timing confluence is pretty good. We have, so tomorrow starts here. So we have prepare for like midday around here for maybe a potential pump. Let's see how well the Ethereum ETF performs. But this kind of posture is really good leading into a bullish event like this. We're downtrending into a squeeze. Liquidity is stacking above us in all these key areas here. So it's going to help provide more momentum to bring it up. I got to head out soon, guys. I got a coaching call coming up. Is there anything really quick you guys want to go over before I have to go? Give us an unwritten tip. What do you think there will be a flash dump or pump? It doesn't have to be a flash move. We had a flash move yesterday. I'm more bullish on, like, there's some people obviously selling into the event right here, and there are probably people slapping stickers on it calling it the sell news event. The posture is bullish, so I'm thinking it's more likely to pump, especially knowing now that, you know, if you guys understand how these spot ETFs work, they can't legally sell their Ethereum. They have to buy it to hold it on behalf of their customers at a 1-to-1. So they can't sell their Ethereum. And Ethereum has become, ever since it switched to a proof of stake protocol, it's become deflationary. So deflationary plus ETFs absorbing a lot of the supplies is going to cause some form of supply shock for Ethereum. So I'm pretty bullish on what's going to happen tomorrow. So there might be a bit of a sell-off or a bit of spike here and there for weak hands, not realizing what they're selling into. But I think that overall it's going to be bullish. Let me zoom in on the 4 hour for a second. Like, look at what, yeah. And we got like inverse head and shoulders behavior too, just to stack it on top of that. And we're going against structural POC from this this range here, but this break will be the confluence of breaking that structural POC and the inverse head and shoulders and the micro falling wedge that we've got going into the ETF event. So everything is screaming we're going to the upside potentially. I think it's just going to ignore this little potential little exhaustion that we got here, and I'm going to go up. Would a low leverage trade with wide stop loss be a good idea? So you can use whatever leverage you want, so long as the risk reward ratio is safe and so long as you're consistent with your losses. So yeah, I would say a lower leverage is a better idea, because if you're trying to use like a swing low guard in a more of a macro based trade, your swing low guard is going to be a decent amount of percentage, like 4%. And you want to at least target here for a 10% gain, but you're risking to lose 4% to gain 10%. So just sync your margin to make sure that you're risking the same amount of funds that you always do with all your trades. If you're trading with $1,000, risk to lose 10 to gain 20 or more. Ethereum, I think, is going to have some relative strength against Solana. So that's a good question. Someone asked for Ethereum or Solana. I would prefer you to pick something like Ethereum for at least short term for that kind of setup, because there's going to be a lot of adoption tomorrow. And boomers can adopt, right? People that don't understand crypto can buy crypto through these ETFs. Where do you research new projects for Ethereum? That's a good question. There's lots of places you can look up. You can use CoinMarketCap. You can use token sniffers that are Ethereum token sniffers, meaning like if you just look up like token sniffer Ethereum network, it will show you every asset that is born the moment that it's made. But then you have to be very cautious of whether or not it's going to be a rug pull or not. You got to learn how to, well, you don't have to learn how to recode anymore with ChatGPT. You can just copy and paste the code of the asset to see if there's any like honeypot scams in it, or if there's any like anything like that built into it. Any backdoors. Michael, gotta run. Thanks for today. No problem, man. See you tomorrow. By the way, Karma to $1. Yeah, Karma could do really well too this cycle. Oh, the Karma's going to do really well this cycle. I'll make sure of it. Don't be like me and ignore stop loss. I lost a lot of money. Stop loss is such a lifesaver. Yeah, man. Stop losses are absolutely crucial for you to be able to grow as a trader. And people think of them as their worst enemy, but it's just because they're putting them in locations where liquidity resides, so they end up getting stopped out before it goes to the move that they predict. What do you think are the best pairs to trade as a beginner? So I would recommend that beginners learn a range trading based strategy rather than a trend strategy. Now, it helps with your emotions, and it also has like a lot of opportunities and a very easy set of rules to follow. If you mess up on it can be expensive. Whereas a range-based strategy, usually your mistakes are more affordable. So if you're going to be, as a beginner, you'd want to find a range-based asset, and I really recommend maybe learning how to trade with Chainlink. Chainlink has got very predictable moves. Bitcoin, I just live and breathe Bitcoin. I would recommend Bitcoin, but it might not be as easy as something like Chainlink or Atom. And if you have access to KuCoin, then Energy Web Token's a really good one too, because it just ranges for decades. And I'll pull up an example of what I mean. And then I gotta head out soon, guys. Link So zoom it on the daily here. Just look at the age of some of these ranges, and it just becomes easier and easier to predict the longer you stay in a range. This one's 540 days. I don't know what's going on with these long short position tools. These aren't ones that I put in. 84 days, 64 days, and so on and so forth. So if you learn how to draw trend lines to anticipate buyer's momentum, so these momentum lines that I'll just show you an example once I get over there. I don't know why it's taking so long to print. But you see these momentum lines I got drawn. It kind of shows you the pace of the buyers and the pace of the sellers. And once we get to key areas of resistance within a range, you wait for it to break, and then you get that change of character, and you enter your short, and you target the opposite side of the range. Back and forth, back and forth, back and forth. And it gets easier and easier and easier, man. So using valley areas to help identify areas of supply and demand, and key levels to prepare for shorts and longs, using momentum, like these little trend lines here, using the RSI for bullish and bearish divergence if you want to have that as a rule. Bullish bearish divergence, by the way, is not a rule for me, but it's just extra confluence. But I do watch the structure of the RSI the same way I would watch the structure of a candlestick and see if we lost momentum and got acceptance back inside of the below the 70 level for a short or above the 30 level for a long. Stuff like that. These are not accurate, by the way. I don't know why it's showing me my stop losses like this. It's weird. But TradingView has been weird for the past week. I'm not sure about you guys, but especially with that fixed range volume profile issue, these tools were completely broken for a while, like a couple of days. Good coin for scalping. Yeah, like I said, if you're gonna scalping is best for ranges, and luckily the market ranges 80% of the time, so you get 80% more opportunities trying to scalp in a range. So Chainlink's good for ranging. Energy Web Token's good for ranging. Cardano is good for trend-based traders. It likes to go one direction for a long period of time. I know we have Heidi in the community who does Near token for grid trading. And grid trading is basically a form of range trading. But yeah. I can do one more question before I gotta go. Oh, you want me to look at Pepe? Blah. Okay, I can look at Pepe. I might have a Pepe chart. I'm kind of secretly hoping that I don't. Yeah, I don't. But we can look at it. Oh, it's fractalizing for a bottom here. Okay. Got some support here. We got this line here I got drawn out for resistance. I'm guessing it's macro resistance. We'll take a look and pull the fixed range from the start of the consolidation to where we are now. We're at the point of control for this structural range. It does look like it wants to go up. If it goes down, we have a really good setup. If it goes up, we have a good setup. We have like two key areas right here. Here and here. We have more bullish confluence with the long though. So if the long, we break this level, we'd honor this as a form of support. as uptrending level support here. We would honor the point of control as form of support. We get above the daily VWAP, which is a strong level of resistance in trading. And we'd have the double bottom. So we would target the liquidity that's right above this wick in confluence with the value area high. And then with the 15, we can see that we're getting squeezed. So you definitely want to listen to that take profit area. So if we end up hitting there, we could just as quickly come right back down because of the fact that the price is starting to squeeze against this support. We don't have very much time in this area left. And that's short term for it. I hope that helps with the short term stuff. When it comes to like the short though, if it does play out, it's a little bit higher risk. We'd lose this uptrending support. We lose the point of control. We're on the opposite side of the VWAP. VWAPs are used by some traders to control their bias. And right now the bias is short. But if we get a close above this, the bias would flip to long, right? So that's why it's good for confidence for the long. And it's good for confidence for the short. So we have our entry will be roughly around here. Stop loss will be around here. Our take profit would be between this value area low and this momentum line here. The R&R isn't great though. So hopefully you get a good, maybe a pullback entry to try to get a good entry here after it confirms. After these things confirm, we get these breaks of structure, you can just easily come back up to retest this and come down. And you can get it in during the retest since it's already confirmed against the rules. But let's go and zoom out. Like I said, I would have already on the daily. And we can just see where we are. Pepe, started to slow down its pace here. And we came up, this is the, I wasn't really banking on this being honored when I drew it because of the amount of negative space that we had. But here we had this evolving momentum that occurred, and it was being honored really, really well. So after we lost that, we started a downtrend, and we just recently broke the downtrend. And this is the structure that could potentially give us a continuation. But I think we're more likely to range here. Right, so I think we're more likely to range here, and we might get an inverse head and shoulders. If we do break to the downside, then I'd watch. We could go as low as, beyond the value area low and go as low as this level here. And get a reversal. A reset a little bit. But short term, this is how you prepare. This squeeze event, if it breaks to the upside, it could give the momentum that we need to confirm what we just spoke about. And if it breaks to the downside, then this is our key level that we got to watch, but you got to really watch the local value area low. Look above at my question, please. Okay, I got to look for a Luke here. Why do I have no problem letting my trades hit their stop loss, but when it comes to a TP, I want to take profits before it hits? Weird. Because that's like a mentality that comes with someone who doesn't like to accept a loss. You're holding your losses, but you're not holding your gains. So your goal, man, you need to find a set of rules to help you with your exits so you don't take profits too soon. For example, like if you entered this double bottom right here, and whether it be a separate strategy that allows you to get in lower with Fibonacci, or you're getting in during liquidity grabs, who knows your reasoning for entering down here, or if you're just jumping in during the acceptance into the value area and the break of this double bottom, you're using that confluence to target the value area high. You can have a target in mind, right? You can have a target in mind, but you should try your best to look around, like as we say things start going again, like up your direction, you gotta look around into all the things that are now guarding your stop loss that wasn't guarding your stop loss before. Like if you see, like here would be your initial stop loss, and we got this break to the upside and we got the higher high. You can evolve your stop loss here. Here we got the higher high. Evolve your stop loss here, higher high. Evolve your stop loss here. And then once we break momentum and lose support, you can listen and exit the market before letting it hit your newly formed stop loss. But really, you just got to find a set of rules for yourself to allow you to know when the best time is to exit, so you're not using emotion to guide your exits. I hope that makes sense. Like if you have like rules for entering a long, you can find rules for the exact opposite set of rules for entering a short. And if you have a reason to enter a short and the measurable target's the same as your long entry, then listen to the market and it's telling you to get out. For example, if your rules for entering long is bullish divergence below the value area low and you get acceptance into the value area and break of momentum, like all those rules being met for a long, and then you see the opposing rules, you know, for a short start to be triggered, then that's a way of getting out of your long and just not allowing yourself to be emotionally involved in your trade and just letting the rules tell it. If you have everything based off a set of rules, it's almost like you're gamifying a way to make money. And if you have rules, you can backtest those rules. And if you can backtest those rules, it can give you a percentage chance of being accurate. And then it just becomes a numbers game. You're basically printing money. Even if your strategy has like a 45% win rate, you're still going to be profitable with a 1 to 2 risk to reward ratio. And then it's just up to you about whether or not you want to hone your rules and improve that percentage to be a higher and higher percentage. And then you can get to the point where you have the same win rate as I do. My issue is often the opposite. I hold my gains too long because I try to get swing entries. So if you're trying to get swing entries, you gotta like, see, I know a lot of your trades, Wagner, and a lot of your trades are like the short-term stuff, and you can use like short-term structure as a conduit to get those swing trades. Like this is a good example on Pepe. When we're looking at Pepe, we have an inverse head and shoulders behavior, and this is the point of control. If we break this, you can do a short-term entry, have your stop loss here, targeting just the local momentum-based target. But if we break above that, you can stay in your trade for a swing. But you gotta like babysit all those new swings to evolve your stop loss, securing more and more profits if you're going to convert your short-term scalp into a swing trade. For me, I do that sometimes, but I normally have, like I have 2 separate accounts for like the swing trading stuff and for like scalp trading, so I can separate the two and not convolute my trading. You don't want greed to take over and keep you in a trade too long and then end up losing the money that you gained. You're always going to leave money on the table. Just so you're aware. So don't put yourself in that mindset where like, oh, I closed my trade at the value area high, but then it pumped all the way up here. I could have made this much. Then you put yourself into mental debt, and then you hold your trades way too long. It's just not. Your goal is just to capture these moves and compound it into the next one. And then you become the asset, and it doesn't matter what the actual asset you're trading is doing. Your goal is just to grow the market cap of your account rather than focus on the market cap of the asset. Like that's my mindset when it comes to this stuff. It's just thinking of your own portfolio as a chart, and your goal is just to keep it uptrending, right? You're going to have these little swing lows, little swing highs, but you just got to keep it uptrending, getting those like small moves rather than just trying to get those big moves, will allow you to compound and grow. Like, you know, I've said it a million times, like 2% trades is mathematically more profitable than 10% trade, because the compounding effect that it has over your account. Well, yeah, guys, I got to head out. Thanks for everyone who's watching. I appreciate everyone who's been subscribing, especially since I've been quiet for the past couple weeks working on this merge stuff. But I'm going to be active again. And I'm working on, as you can see, my background and stuff like that's changing a little bit. I'm working on a new setup so I can do some more cool videos for you guys. And now that with this merger, I've got less admin work I got to worry about. So I'm going to spend more time giving you guys more YouTube videos and more time with the signals and stuff like that inside the community so we can make some more money together. If you have any questions, you can reach out to me in the Fanova Discord or in the InvestiShare one, but I'm more active now in the Fanova Discord, so if you guys need help, just reach out to me and I'll do best to help you out. You guys have an awesome day.